Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I'm just going to go over some questions that I see in the comment section, answer some of the questions, give my financial opinions on it. Again, if you need any help with the commodity bull market that's coming, I'm seeing a lot of opportunities out there, lots of good chart patterns that are setting up for individual companies across the board. Definitely become a platinum member on the finding-value.com website. We do have a discount going, so you can put in the coupon code DISCOUNT. All right, so let's attack some of these questions and see what my opinions are. So here's one. It says, with uranium, Andy, do you think some investors may be looking at what the Russians are doing in Ukraine with that big power station there and are a bit nervous about investing at the moment? Well, I get a lot of questions about news-related things. That to me is kind of news-related to some degree. And in all honesty, guys, I really don't pay too much attention to all the news out there. I understand that the news is going to be positive for a bull market in any of these commodities. If you're in the bull market, positive news comes out when things go up. When things go down, it's all negative. And I don't think news drives the price at all. It's a combination of factors that drive price. So the question you should be asking yourself is, what drives the price? What drives the price of the stocks that you own? I know you're looking at me to give you an answer. I know. Let me step back and I'll let you know kind of what my opinions are and my investment strategy. So when I look at Camco here, this is the last bull market. What I'm interested in doing is I'm interested in getting that run. Now, I might not be successful at getting the absolute bottom right here. I might not be successful at getting the absolute top right there. But I'd be happy if I bought in these general vicinities all through here, cost averaging in, and then selling maybe up in this region up here where you can sell. The question that everyone should be asking is, what drives this price and how do you do that? How do you sell at the top up here? How do you buy at the top down or at the bottom down there? And how do you know and how do you ride this entire bull market in CCJ, commodities, whatever it is, right? How do we do that? Well, my opinion is, and how you do that, is you have to figure out how to tell value, how to tell values. And if you look at, say, like a chart, and the uranium chart for futures pricing isn't working at the moment, but it's real nasty on TradingView. But if you look at a commodities to stock ratio, again, I go back to the ratios, and I probably just blew right by it. So right, it's somewhere in here. Actually, I've moved it all the way to the top. That's right. I share it all the time. So you go to the CRB to S&P, the commodity stock ratio, you back out, and this is how you do it. You say, look, we went to a very expensive level in that region there, and it was very cheap. I don't have the beginning of this, but we can look at the previous bull market. It's very cheap down here. That is where I'm buying all of my commodities. I bought a whole bunch down there, a gigantic amount. Not everything I had, but a lot of what I have. And the reason I did that is because the commodity to stock ratio is at 100. Well, actually, it was at all-time lows, but it was lower than the past 100 years. Do you think news is the reason that this is down here? Or is this structurally driven in the markets? What caused the CRB index to turn against the S&P 500? Why did this ratio turn? Why am I so bullish on commodities at this bottom? I can tell you why. But this is the things that you need to know as an investor. It's not the things that I need to know. And obviously, I can help everyone through these commodity bull markets, and I'm going to hopefully accelerate your learning dramatically. And that's why I set up the website. The reason I bought down here is because of this. I'm going to go to longtermtrends.net. If you go to the M2 money supply, there's a couple of reasons why I did it. And I went, quite large. The first reason is this thing spiked like mad. The M2 money supply spiked. And that spike leads to a spike in inflation. I think this inflation is a number that's very doctored up. It's a lot lower than what it really is. But this move higher is one of the reasons that I thought we were going to see a rotation into commodities. It's the inflation in that system. You can see it's declining here over time as well. So this was going to be a move higher. We'll probably have a consolidation period. And this could very well go lower because of the M2 money supply, depending on the velocity. But I bought down here because that M2 money supply was pumped. I also knew that there was a commodity deficit, like a bunch of different commodities had deficits. So the combination of them being cheap with the deficits out in the near future, the risk reward here is off the charts. Off the charts in a good way. Gigantic upside, small downside. Then I went and I said, okay, let me look at some of the other commodities and their ratios. And you start looking at the ratios. Platinum to gold ratio was down here in no man's land. I loaded up in physical platinum. Why? Because the ratio is cheap against gold. It is cheap. And when you get into an inflationary environment, generally platinum outperforms. You look at platinum to palladium, cheap down here, super cheap. And then you look at platinum to silver, and that was also cheap in that general vicinity of 2020. And now it's starting to outperform a little bit. I was also looking at the gold to oil ratio. We were up here at a ratio that I've never seen before. Even in history, we've never seen a ratio that cheap. So the risk reward here was off the charts for oil. Your risk, though, is you could buy a company that went bankrupt during that time frame. And that was a pretty big risk. Right now, we are back down to this level, right at that support level. We've been coming and trying to compress lower. They did release strategic petroleum reserves all in this general vicinity. I'm curious to see what happens here and if we go lower, where oil continues to outperform gold because of I'll call it the manipulation in the markets. But down here at 21, that's what it currently is at. It's still pretty cheap. I mean, 30 is like a really cheap number up here. That's usually where commodity bull markets start, is at about a ratio of about 30 or so at these commodity bull markets. That's a ratio there about 30. This one's a little higher at 44. But those are incredibly cheap, and then they compress down. This one's compressing down to this bottom line. Now, we're dancing on this bottom line. But you look at that supply-demand deficit, it looks pretty bad out in the future with deficits in oil. Big deficits, like never seen before deficits. So I'm going to remain long. I mean, that's the strategy there. So when you ask the question, I'm going to go back to the question, do you think investors may be looking at Russians are doing in Ukraine? The question is, should you be looking at it? My answer is, probably not. I don't think it matters. Even if it has an impact on the short term, we're going to see more, I think, nationalization of companies. I think we're going to see wars over commodities. And one thing I want to make sure that everybody understands too is all value is derived from energy and commodities. Everything you eat minerals. Think about that for a second. You eat vitamins and minerals and all these different things, and it goes into your body. And that is just a derivative of energy. That's all it is. So all of the wealth in the entire world is a derivative of energy. Everything you eat, everything you do, everything you travel, it's all over the place. All of these things that we build, it's just embedded energy. And it's minerals that we had energy that we took out of the ground in ever greater quantities, and that is the wealth. Crypto and all these things that are digital are not wealth. They are not wealth. And you will see when the physical world, and if we get to this point, I don't know if we are, but if we get to a point where things become incredibly hard to get or scarce, you'll see where the value is. It's going to be quite apparent. And we're going to try to engineer our way out of this and do substitutions. We're going to do all sorts of stuff. It's going to be pretty crazy. But I think the scary part is how many, how big the shortages are, how many shortages there are, and how widespread it is. I don't think people can, you can handle, it's like just like your life, right? You can handle like one bad thing at a time, maybe two bad things. But if everything around you's crumbling, that's when you just lose it. It's kind of like you get an illness, your parents pass away, one of your kids pass away, you lose your job, and it goes on, and you're like, dude, this is a little bit too much. So I mean, that can be something that just puts you over the edge. It's very similar to what I think that we're facing with maybe potential shortages in a lot of different commodities. I think we could handle one or two or three, but when everything's kind of going short all at the same time, I think that's kind of overwhelming. That's all. That's what I mean. I'm not trying to be over the top or anything. I'm just giving you an example. Now, let's look at a couple of other questions here. So I'm not very big on news, guys. I really don't like the short-term movement news stuff. Although I look at the short term to try to get my entry points as best as I can. It says, all the charts are setting up for a rocket. It's crazy. We're just waiting for the countdown. The countdown can always be delayed by market tanking. Calm patience is required. I do think that a lot of the charts are looking pretty good. There's a lot of different opportunities out there right now. Some of them look crazy good. Crazy good. It looks like they're trying to break long-term downtrend lines, which is kind of the last line of defense. And some of these companies might make new all-time highs. That's also, I think, very positive. Told you it's a political market by spreading false rumors and jacking interest rates. Guys, they're not going to hold this down. It's structural by nature. They can try to do all this stuff, all the news, all that stuff. It's not going to stop these shortages from occurring. At least that's my opinion. For oil and gold and all these other ones, the imbalances are in the system already. We don't have, we have way more currency in relationship to gold, and gold always does its accounting to the money supply under an inflationary market structural condition. That's when money rotates, because it rotates away from bonds and goes towards real things, precious metals being a real thing. Now, it doesn't mean that's going to happen immediately. And people confuse that, I think. It does not mean that, within 2 months that this is all going to get revalued, but I think over the years it will. The exact timing, I don't know exactly in the short term. Could it be very soon? Yes, it could. The charts look very good. But I'm a pretty patient guy, and I don't know how they're going to get around it. So that's kind of where my thoughts are, and I don't think it has anything to do. They can do whatever they want. They're not going to stop. I think they can delay this, but I don't think they can stop it in its entirety. They can definitely delay it for a good long time. Looks like some people buying some oil. That's good. It says Jeff Curry of Goldman Sachs said Russia was dumping oil onto the market in anticipation of the December 5th EU embargo. Could explain oil's recent weakness. Also, we have another OPEC meeting. Well, if that is the case, one thing that I was reading is that we had a massive draw in our inventories. So, well, this is a cool one, guys. This is Alberta natural gas prices at the current month, and they just keep going higher and higher. We're over $6, 6.5, over 6.5. That is pretty crazy in terms of the natural gas prices. And some of these natural gas companies, they're going to look mucho bueno. I'm just going to say that. Here's, we got these chart patterns that are all squeezing up. This is a uranium company there. This is Bitcoin falling out to the downside of this pattern here. Although I do think this may be a little bit, I'd say it's more towards the bottom than it is the top. I know who had it though. So Josh Young, they just recently, I'm going to share it too, posted that here. Okay, there's two things I want to go over here. The looming oil supply shock launches debate in OPEC. And this oil supply shock is coming, guys. It's coming ahead of us. I don't need to go in here and read it all. I already read some of it, but it's out there. And Saudi Arabia is starting to talk about it like, look, guys, this is not looking good. And I think it's going to happen within a couple of years. The other guy I had on here, Eric Nuttall, he also thinks that oil is going to go over 150. That's kind of where demand gets destroyed within the next couple of years. I agree. That's the time frame you have to look at it, a couple of years. We go over 150. Some of these companies are going to do incredibly well, and they're highly leveraged to those price moves. We are in an energy crisis. We just don't see it in the short term, it seems like. OPEC spare capacity is insufficient. Another one there. I like the OPEC one. This is what I wanted to see. Another big oil and products inventory draw, bullish oil. Weekly oil inventory report from API, big draws. Keep in mind, these are not very reliable. Crude, minus 5 million. Cushing, minus 1.4. Gasoline, minus 400,000. Distillate, up a little bit. The SPR down 1.6. Got to retweet that. So big draws are happening as well. And we continue to draw down in oil. So now here's another thing that is very difficult to figure out here. So he says, when the Fed pivots, the market may tank. So back in history, the pacing factor was the housing market. Now, there could be, from the stimulus money that came into the system, it rushed into that system, it caused inflation. We could come back down, and the Fed funds could go down without causing a crash. Now, that's me speculating. It very well could cause a crash. But usually what happens, and this is what the indicators are, all right? At least this is my opinions on it. You have a steady state of the housing market, right? A larger demand comes in, and it starts buying more homes than what exists in inventory. We get a short inventory, and prices start to rise. This is with the housing market being the pacing factor of inflation and the loans coming into the system. That kicks. So when that starts going up, it kicks on the housing starts, because more demand for new homes happens when there's a shortage of existing homes. When that shortage of existing homes comes, the housing starts come up. That is inflationary. The interest rate chases the inflation that is being pumped into the system of that credit expansion of the housing market. The problem with this cycle that makes it very confusing and hard for anyone who's reading this, and I don't think anybody understands maybe perhaps the dynamics here, and I'm going to describe those dynamics. This is the dynamics that I see. They pumped the system with a bunch of money, stimulus money. They sent checks to people. That is inflation. It's definitely inflationary. Now, there's a lot of money that was sent out, and money circulating through the system. You get velocity starting to kick up. And we're seeing that inflation. Now, the question is the inflation from the housing market, or is the inflation from the stimulus? And if it's from both, how much is each? That's the tough part. Because let's say it's from both. The loans coming into the system, we went in an expansionary phase, which we did, and we got money coming into the system. And that inflation caused by both of those components put it to a level that was not sustaining by the market. So our interest rates are going to chase this inflation level, which was I'll call it a pump and dump by the Federal Reserve. They pump money into this system, and then eventually it's going to dump down to the back on the backside. But it's going to push interest rates and pull those interest rates up to a level that may be too high for the market to sustain the housing market. Now, that doesn't necessarily mean that the housing market's going to just crash out. We could see it drop down slowly. As long as we've got an imbalance in the housing market of supply and demand, you get your interest rates and inflation to come up, then it's going to do a disinflationary pullback to some level where things start to equal out. I don't know what that level is. Now, looking at history, when we looked at history and we look at all these different things in history, we've always been, the pacing factor was the housing market and the demographic and the supply demand shortage in the housing market and those new loans coming against new homes, which is the credit expansion phase of the business cycle or real estate cycle, either one. That was the pacing factor. This time, as we go through it, it's not necessarily the pacing factor because they dumped all this money into the system all at once. That was that big M2 shot higher. So what's it going to fall back down to, and what are interest rates going to do? Are interest rates going to come back down and then the housing market stabilize and start to go back up? Maybe. I don't know. We've never seen this before. I don't have any data to go off of, and neither does anyone else. And I don't really hear anybody talking about it in this type of sense. With respect to the inflation coming in the system, they think that everything's just going to crash just like a normal market. I don't know if that's going to be the case. I don't see why it would. I would think it's not going to be the case. I think that interest rates are going to go up. They're going to come back down to some level, stabilize at some level that the housing market will stabilize at. And I don't know what that level necessarily is because in history, the housing market was the pacing factor. This time, it's part of the factor, but you also have all the stimulus money and interest rates could go up at an inflation. Interest rates could be pulled up to an inflation rate that's higher than normal. We also have all these other currents in the background. When interest rates go up, we have higher interest payments with lots of debt, and that could kick off a cycle where we start paying the Social Security, Medicare, Medicaid, all these different obligations that we have. That could kick off more inflation. That we haven't really seen that in the past to the same degree that we have today. We also have piled onto this an energy crisis. So we have all of these factors that I don't think anyone's seen all happen at the same time. We've seen certain things happen at certain times. For instance, the 1970s, we had an energy crisis in the United States, which was contained to the United States for a short period of time with a larger demographic coming into home buying years, but we didn't have the debt. Move forward, we have a global energy crisis. We've got a debt problem. We have a demographic that's the one that was in home buying years back. The baby boomers are now in retirement age. Now they're getting all those payments from the system. And now we have millennials coming into home buying years. This is a really weird dynamic. And I think it's going to be inflationary for sure. And it highly depends, I think, on the supply of energy. If we have a big shortage of energy, I think this is going to get real ugly, at some point. And I think a recession is going to come, and we'll see what oil prices do. And I think it's going to be incredibly volatile, and we're going to go back and forth. We're going to go high energy prices, hit a limit, recession, do it again, recession, and just be killing it through the supply and demand of supply going down and the demand trying to grow, but it can't. We keep hitting some sort of ceiling. Colin Campbell, he's an oil geologist back in the mid 2000s. He basically called that, and I think he has it right. So that's kind of what I'm seeing is coming, and the system's pretty hard to read because of that. And then I might get some people on the channel here, some people that are they've been around the markets for a long time, I may ask them some of these difficult questions and see what their thoughts are. But and we'll see if they want to come on. But yeah, that's what I've got for today, guys. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. Subscribe to the website if you guys need help. We do talk about a lot of this stuff. Join our community. We'd love to have you on the website. Come to our Platinum question and answer sessions. We have one Saturday, 7 a.m. That'd be 11/26, I think, is the date. Yep, 11/26 Saturday. That's Mountain Standard Time. Love to have you there. We do have a discount code. It'll work for the Platinum membership only. And again, that's for 1 month of the monthly that you get the discount, and then it's a big discount on the yearly subscription. All right, guys, we'll catch you next time. This is Finding Value.